class. Today we are going to continue on chapter 4, redemption of shares, share buyback, and also redemption of debenture. So today we are going to do some exercise, okay, based on the notes and lectures which I have shared with you last week's, okay. We are going to try question in the practice kit, the exam-based question. Okay, so please refer to question 3 on page 19. We are going to attempt Ceria Berhad. So first of all, class, as usual, what we need to do is that you have to read all the question first, okay? Read all the information given and you are going to answer for the question. So the question here is, okay, we are going to, number one, prepare the journal entries to record the above transaction. And number two, we have to prepare the statement of financial position extract as at 31st December 2000, year 5, okay, which you have to show the equity and liability section only. So, what we need to know is that in chapter 4, we learn that company may redeem its redeemable preference shares, and besides than that, the company may also purchase, okay, ataupun repurchase or buy back its own shares in the open market, or the company may redeem its debenture. Okay, as for redeemable preference shares, okay, is not tested in chapter 3, but you have learned in chapter 1 of, chapter 2 of company, where it mentioned that one of the liabilities that company may have is redeemable preference shares instead of debenture. So here we have a new item under non-currentability, which is redeemable preference shares. Now, even though the name have the word shares, but this type of shares is not similar as the normal preference shares or the ordinary shares, which classify as equity under issued and paid up capital. Because, okay, this type of shares um, require company to redeem ataupun memerlukan company untuk menebus semula, membayar semula amount yang telah dibayar oleh pelabur, di mana di situ there is an obligation of the company that indicates this is liability. Okay, even though the form is called as share, but the substance is not an equity. It is a liability to company. Similar to debenture, so redeemable preference shares and debenture is under one on same category, that is non-current liability. Okay, so you may refer it in my slides, okay, where I have introduced the RPS in the earlier slide. Okay, this is definition. If you want to know what is redeemable preference shares, it is said that in substance, this share is classified as a liability, okay, in SOP, once the issuance provide a mandatory dividend payment. This share is liable to be redeemed at a specified date with a determinable amount once it is issued by a company. So class, when the word here redeemable attached with the name of preference shares, this type of share is classified as liability. It's not as equity, because the company has an obligation to settle back this share, okay, at a specified date lah. And associate with that, okay, any dividend that paid to this type of shareholders will be considered as an expenses or called as finance cost, and is to be recorded in the statement of profit or loss. Now, this item is not being tested yet. We will learn it further in chapter 5, where we can see that there are payments of dividend towards the ordinary shareholders, the normal preference shareholders, and also to the redeemable preference shares holder, where we can see that there will be different treatment for dividend paid to ordinary share and normal preference share will be classified as distribution profit under statement of changes in equity, while the dividend to this redeemable preference share is recorded separately in the statement of profit or loss, because the classification is different between those two. So don't worry, in chapter 5 we will learn further. So go back to our question. So here, the new thing for you is that the term of redeemable preference share. Okay, while the rest, okay, we already learned in chapter 2, chapter 3, you already know what is ordinary shares, what is retained profit. Ordinary shares is the equity shares for the company. Okay, the company has no obligation to redeem the shares. Company tak ada satu kewajipan untuk menebus balik saham ini. Maksudnya tidak wajib untuk company ini menebus balik untuk membayar balik, unless for certain reason lah. Kalau dia berminat untuk membeli semula, yes it can, tapi it is still optional. It's not a mandatory as per redeemable preference shares. Okay, retained profit, I hope everybody also know what is retained profit. It is part of equity as shares, okay, but it is classified under reserve. It is the accumulated profit starting from the establishment or the operation of the company and until now. So dia adalah keuntungan yang terkumpul bermula daripada bila company ini beroperasi dan hinggalah sekarang. Okay, so now our task is we need to prepare the journal entry. Okay, recall what we have learned in chapter 3. So chapter 4. So basically in chapter 4 class, there are 3 main transactions that we have learned. Number 1, transaction regarding the redemption of redeemable preference share capital. And then we also learn the share buyback. Okay. And last one is the redemption of debenture. Okay, redemption of debenture. So, on top of this, okay, we also learn that to finance the redeemable preference shares, okay, we have to follow the provision under the section, if I'm not mistaken, I can't remember the section, but in Companies Act, the provision under the Companies Act, which states that the shares redeemed must be replaced. Okay, I think is in this. Okay, we can refer back to this. Okay, yeah, section 72. Okay, according to the Companies Act 2016, it is specified that if it is authorized by the Constitution, the company may issue preference shares and to be redeemed. Okay, this is not what I'm talking about. I'm referring about this one. Okay, according to section 72, subsection 4, these are the following rule for the redemption. Okay, dia ada peraturan dia. Yes, you may redeem the shares. Okay, only if the shares are fully paid. Okay. And the redemption shall be out of one of the following. Okay, once you redeem, you must replace it back. Okay, so how to replace it back? You may replace it through a fresh issue of shares. You may replace it out of profit, or you may replace it out of capital. But out of capital is not to be tested here. So it's either these two, or yang ketiga is by combining method 1 and method 2. Okay, method 1 and method 2. Okay, why do you need to do this? Because according to the Companies Act, the redemption shall not be taken as reducing the amount of share capital of company. Yes, kita boleh tebus balik, tapi amount dia dah kurang kan? So according to Companies Act, kita mesti ganti semula melalui kaedah-kaedah yang diberi inilah. Okay, let's refer back to the question. Now, kita go one by one. For the transaction, let us identify it. Okay, so this is the what we call the closing balance as at 31st December 2004. And now we are going to do the transaction for the year 2005. Okay, so the following transaction took place during the year ended 31st December 2005. Number 1. Okay, it is said that on 31st March 2005, the directors of Ceria Berhad decided to redeem half of the 7% redeemable preference shares at RM2 each. So the key word here is that to redeem, decided to redeem half of the 7% redeemable preference shares at 2 ringgit each. So if you look at this item, I'm referring to this item actually. This item need to be adjusted due to this transaction. So, number one, the company wants to redeem this share, meaning you are going to pay back partly of this share. Okay, since you are going to redeem, as a consequence, this share will be reduced, right? So to reduce, to finance the redemption, what the company will do is that, we are going to continue the story. The company will issue 100,000 units of ordinary shares at 3 ringgit each. And the shares is fully subscribed and paid for. Okay. In addition, the company will also transfer a sufficient amount of its retained profit to the share capital as part of the financing scheme for the redemption. So here, we have to digest the information. What we are going to do is that we are going to replace the amount reduced from the redemption by using these two methods. These two methods meaning that we will use partly issuing of shares and partly buy out of profit. So we are using method 3, which we are going to combine method 1 and method 2. Okay, this is what I'm going to say, method 1 and method 2. So as I told you, as for the redemption of preference shares, we can finance by issuing shares or buy out of profit, or number 3 is by combining method 1 and method 2. By combining method 1 and method 2. Okay, so this is what I'm referring to. Okay. So based on this question, we know that we are not using only one single method, but we are using mixed method where we combine issuing shares and buy out of profit. Okay, so number 1, transaction 1 and 2 is regarding the redemption of redeemable preference shares. So we already identified one of the transactions to be recorded here, which is redemption of redeemable preference share. Okay, let us look information number 3. As at 30th June 2005, the company decided to buy back 50,000 of its ordinary shares from the open market at a price of 4 ringgit each using the share retirement method. The retained profit is utilized for this purpose. Okay, we already learned in the notes that as for share buyback, there are two methods that company can choose. There are two methods that company can choose. One is called as treasury shares method, and the other one is called as cancellation or retirement method. So in this case, question 3, the Ceria Berhad choose for, yes, they choose for retirement or cancellation method. Okay, I'm going to use blue color. So the keyword here is that the company wants to buy back its ordinary shares at a price of 4 ringgit each, and they will use the share retirement method. So as for the share retirement method, of course, you have to memorize the step where we need to transfer the same amount from the retained profit to the ordinary share capital account. Okay, so the next transaction is the share buyback. Okay, share buyback using retirement method. Okay, retirement method. So you don't have much to do. You only have 2 transactions to record here. So number 1 is the redemption of preference shares, and number 2 the share buyback. Okay, so let us prepare the answer together. Okay, I'm going to refer to this solution. Cheria. Where is Cheria? Okay, this is I'm looking for. Okay. So here we only have 2 transactions. So please prepare the heading accordingly. Number 1, okay, the redemption of redeemable preference shares, and number 2, the share buyback using the cancellation or retirement method. And we can use either or because it's carry the same meaning. So number 1, redemption of redeemable preference shares. We know here we have redeemable preference shares by this much. This is the balance in our account. So this is the balance in our account. So what do the company wants to do? The company wants to redeem. Dia nak bayar balik separuh daripada redeemable preference share ni. Okay, they want to redeem half of it. So kalau kita lihat in total the company has 400,000 units at 800 ringgit. Okay, please. Okay, at this stage I would like to remind again and again, you must be able, class, to differentiate between these 2 figures because they are not the same thing. Okay, these figures, okay, is referring to the number of units of shares. Okay, the number of shares. While this one referring to the value in ringgit. Okay, similar to ordinary shares. This one is referring to the number of shares, and this one referring to the value in ringgit. It's not the same thing. Okay, so when the company wants to redeem this share, what is the first transaction? The first transaction is that you need to reduce the share and transfer it to a temporary account called redemption of preference share. So bayangkan sekarang kita ada saham tu sekarang kita nak tebus balik. Bila kita tebus, bermakna kita tidak lagi memegang saham tersebut. Kenapa? Kita akan bayar balik kepada pelabur tadi. So the first transaction is you debit the account. You have to debit the account. Kenapa debit? Sebab capital account, when debit, it shows that there will be a decrease in the account. Kalau increase, kita kredit. Ingat, dalam chapter 3 kita jual saham. Jual dapat duit. This time kita tak jual. Kita ambil balik saham tu, kita bayar balik kepada pelabur. So, saham tu akan berkurang dan duit kita juga akan berkurang. Dia different from chapter 3. Chapter 3, jual saham, modal naik, duit pun dapat. This time terbalik. Kita beli balik daripada pembeli kita ataupun kita lunaskan balik bayaran kita. So of course semuanya akan berkurang. So debit the 7% redeemable preference shares and credit to redemption of preference share. Nampak? This is the double entry. So redemption of preference shares is just a temporary account. Dia hanya account sementara just to record the movement of the selling of the redemption lah, of the settlement of the account. Okay, so the question is that how much? Let us refer back. It is said that you are going to redeem half. So when we talk about half, we cannot go to the value. We have to refer back to the number of unit of share because you are selling the shares at 2 ringgit each. So you need to know how many units that you have redeemed, right? So half from 400,000 will be how much? 200,000. Yes, okay. Half, half here refer to half from the 400,000 units of shares, and then you multiply with 2 ringgit. So that is the working. Therefore, the answer is 400,000 ringgit. Ringgit, I'm talking about ringgit. Then what you need to do, the next step is you will make the payment. Okay, since you redeem, you have to pay. So you debit the redemption of preference shares and credit bank. As you can see, the redemption of preference shares will have 0 balance. You already closed the account. That is why I call it as a temporary account. Now, why you credit your share, your bank? Because you make payment. So when you make payment, you will use your money. So your money will be reduced from in the bank. Okay. Now, the next step. It is said that, okay, as I mentioned to you, this share shall not be taken as reducing the amount of share capital. Thus, you have to follow this restriction. So, to finance the redemption, the company decide to sell your ordinary share at 3 ringgit each and then you will take the sufficient amount from the retained profit. Okay, so now we have to know how much do we need to replace. Okay, here we are. This is the amount that we have to replace, class. Okay, 400,000. Okay, nampak? You have already reduced this amount, so you need to maintain back. So how to maintain? The first one, company will sell its shares. So how many shares do the company sell? 100,000 unit at 3 ringgit. Okay, I'm using this information. Okay, so you got this money lah, 300,000. But then it's still not enough. You're still not enough. Kenapa? You only get 300,000. You still need another 100,000. Because originally you redeem at 400,000. You issue ordinary share at only 300,000. You still have balance of 100,000, okay, to be top up. So where to get this 100,000? As I told you, we only have two methods, okay, because capital is not be tested. It's either you selling share or it's either you take it from profit. But since the selling of share is still not enough, so the balance of 100,000 will be taken from where? Sorry, here. From where? You are going to take it from your retained profit. You are going to take it from your retained profit. So this is the step. Number one, debit bank, credit ordinary share application, and then you close debit ordinary share application and transfer to the ordinary share capital. So this 100,000 will be take from the retained profit. So retained profit will be reduced lah. When you debit, it will be reduced and you will transfer to the ordinary share capital. So at the end, in total, you already maintain back as required by the Companies Act. So you have reduced 400,000 at the earlier stage, but now you have maintain it back, okay, by combining these two methods. Okay, class, so far, are you clear? Are you with me?
Yes,
You
madam.
understand?
Yes, madam.
Okay, good. Now we have done with the first transaction. Let's go back to the question. Okay, the last transaction is the share buyback. Okay, you know that company wants to buy its share. So usually the practice by the company, they will buy their ordinary shares. Dia akan selalunya beli ordinary share. Preference share tak beli. Okay, dia akan beli of ordinary shares, and then you need to know what is the method being chosen by the company. So the company wants to use share retirement method. So what is the difference between treasury shares and retirement method is that when you use the retirement method, the shares is to be cancelled from the company. So the shares is no longer in the account. You have to lupuskan dia. So the first step is that you have to what we call write off lah the shares from the company. So the first step is to debit the ordinary shares. So when you debit the ordinary shares, it shows that the shares will be reduced, no longer in the company. Because you want to cancel kan, ataupun you choose share retirement method. So the next double entry will be credit purchase of own share. So nampak, debit ordinary share capital, credit purchase of own share. Again, purchase of own share ni pun temporary income. So nampak, you have reduced this 200,000. Okay, next step is you are going to pay to the shareholders. You dah beli kan, you akan bayar. So you debit the purchase of own shares and you credit bank. So bila you credit bank, menunjukkan you dah bayar lah. Because you buy back, of course you need to pay, right? Okay, so at the end you can see that the purchase of own share will have zero balance because already write off each other. Okay, remember as I told you, according to provision in section, in the Companies Act, okay, yes, this one. Section 127, subsection 13 of Companies Act require that when own shares are repurchased and cancelled, the cost of the shares purchased by the public listed company must be made wholly out of the company's retained profit. So you kena gantikan balik cost you beli tadi dengan mengambilnya daripada company's retained profit. Thus, the cost of share buyback will be backed by an equivalent amount of the retained profit. So, berapa amount nak ambil, you will take the same amount. So very simple. Tadi kalau redemption or preference share dia ada 3 method kan. Tapi for for cancellation of share retirement method, cancellation for share buyback, you just have one method. Just take the retained profit and transfer to the ordinary share capital. So here we are, the last step for the share buyback. You will replace this 200,000, okay, by taking the same amount for retained profit. So you debit retained profit and transfer to the ordinary share capital. So retained profit will be reduced, this 200,000, and the ordinary share capital will be increased by 200,000. So as you can see, we already backup or we already replaced this. Okay. Right, class. So far okay tak?
Okay, madam.
Okay, good.
Okay,
Alhamdulillah. Okay, last part, let us settle on the statement of financial position. Okay, we are going to copy this statement, okay, first. But please take note that there are some accounts need to be adjusted based on our new based on our new adjustment. So ni adalah adjustment kita yang baru. So please take note on the accounts which have balance such as preference share capital, bank, ordinary share capital, retained profit. So all these account which has closing balance, need to be adjusted in the new SOFP. So put the heading, Ceria Berhad, Statement of Financial Position Extract as at 31st December 2005. Remember, we just have to prepare the equity and liability section only. So these two represents the equity section. Remember, equity consists of issue and paid up capital and reserve, and this represent the liability section. So you don't have to prepare the asset section. We start with the shares. Okay, already last time. Okay, let us check the movement. Last time we have 400,000 unit class. Okay, last time we have 400,000 unit. How come it already? How come it has increased to 450 ni? Okay, you can check it together. Okay, from the transaction, from the transaction here, kita pergi by chronology lah by chronology. Okay, pada 2000 year 4, okay, this is 2000 year 4, 2000 year 4, I'm talking about the OAC ni. You have a balance of 400,000 units. I'm talking about units now. Okay, but then what happened on the 2000 year 5, based on transaction number 2, based on the transaction number 2, so you said you already issued 100,000 unit. So you have an additional of 100,000. Additional tambahan. So now it become how much? 500,000. Okay, correct? Yes. Okay, we go down further. Is there any adjustment on OAC again? Yes. On the last transaction, it says that the company buy back 50,000 of its ordinary share from the open market. When the company buy back, the company wants to use the retirement method, meaning the shares is no longer in the company. So what you need to do is that you have to minus the transaction for 3, you have to minus the 50,000. So when you minus, the amount will be reduced to 450,000 units. So as you can see in the suggested solution, the amount of shares in unit is 450,000. What about the value? Okay, the value is very simple. You take the last balance, 1,200,000. Okay, 1,200,000. As you can see here, 1,200,000, and you just adjust for the value in the journal entry. Okay, look for the ordinary share capital. Is there any account affected? Yes, this one. Okay, this one, you have this one. This one. Okay, ini maksudnya kalau credit maksudnya apa saya kata? Credit means tambah. Credit means tambah. Ada lagi tak? Ini bukan Ini ordinary share application bukan Don't be confused. Okay, ada. Yes, 200,000. 200,000. Tapi debit. Debit maksudnya apa? Tolak. Okay, lagi yes, ada lagi? Tambah. So how many adjustment to be made? 1, 2, 3, 4. Okay. 300,000 you plus, good. 100,000 you plus, yes. 200,000 you minus, yes. And again plus back 200,000. So at the end, the value of ordinary shares is 1,600,000 ringgit. Okay, class, so far. Can you understand?
Yes, madam.
Okay,
Yes,
do
madam.
you have any questions so far? You can write on the chat box if you feel shy to ask. If you do you have any question, class?
No, madam.
No, madam, it's all clear.
Can I proceed?
Yes, madam.
Yes, madam.
Okay, now let us move to the next part, which is the reserve. Okay, reserve, we only have retained profit. So originally we have 2,240,000 as per last year's balance. Okay, 2,240,000. Okay, again, the same procedure. Look up for the retained profit account. Is there any that you can find in the quiz, in the answer? Yes, you make adjustment here. Nampak? Here you have it. So debit, remember, debit side shows there is a decrease. So decrease, what you need to do, you have to minus it. Okay, what else? Yes, again, you have another one, this one. So debit again, so you have to minus. Okay, that's all. So these two amount you have to minus, nampak? You minus 100,000. Okay, yes, you minus, and you minus 200,000. So at the end, you only have 1,940,000 of total profit. Okay, last but not least, okay, the current liabilities, okay, the non-current liabilities, you don't have debenture in this question, you just have redeemable preference shares. Okay, do you still have balance? Yes, you still have balance because you just redeem part of it, you just redeem half, not all. So, of course, the balance will be 200,000 units, while in the value, it will be 400,000 units. Okay, 800,000, the amount of last balance, and adjust for the redeemable preference share capital account. Okay, this one, redeemable preference share capital account. Yes, so debit shows you have to minus. Okay, so that's all for question 3. So in this question, you only have two main content of chapter 4, okay, where you know that in chapter 4, okay, there are three main content: redemption of preference share, share buyback, and redemption of debenture. But as for Ceria Berhad, question 3, you only be tested on redemption of preference shares and share buyback using cancellation method. We don't have any redemption of debenture. Redemption of debenture very easy, very easy. We just debit debenture, credit bank. These two are usually the most favorites one to be tested. So class, do you understand so far? Question 3, how to do it?
Yes, madam.
Yes,
Okay,
madam.
alhamdulillah, good. Okay, so I'm going to stop this recording first. Okay.